This series of videos is for people who do not have a finance background. Whether you are from IT, HR, marketing, you are a doctor or an engineer. Even if you have your own business, you need to interact with finance professionals at some point in your career. So, learning the basics of finance becomes very important. Our first video of this series is on financial statements. What are they and why do we need them? So the three main financial statements that we will look at in this video are the income statement, which is also called the profit and loss statement. Then we have the balance sheet, and the third one is the cash flow statement. Let's start with the income statement. Be aja. Everything that the company earns is called revenue. That revenue can come from sale of goods or services. Everything that the company spends is called expenses. Some examples of expenses is purchase of goods from suppliers, salaries paid to employees, rent paid, and electricity or utility expenses. All expenses move out. Revenue minus expenses is the profit or loss for the company, and that is why it is called profit and loss statement. Also, income statement aap rasta do, balance sheet aap padharo. A balance sheet has two main parts. One is the assets, that means everything that the company owns. Second is the liabilities, that means everything that the company owes third parties. Let's look at some examples of assets for understanding. This is not an exhaustive list. And the first one is cash that the company has. This is the cash in bank accounts and some cash with company employees for day-to-day expenses. Then if it is a manufacturing company, they might have some machinery, which is also part of assets. The company could also own some land or buildings. Dues from customers. That means a company has sold goods and services and is yet to receive money from its customers. Let's move on to liabilities now. And the first one in our list is dues to suppliers. Now let's say the company has received some goods or a service from a supplier and has not yet paid the suppliers. So that payment is a liability. Next one on the list is debt. The company has taken a loan from a bank or any other financial institution, and the interest and principal due on that loan is part of debt. The third one over here is tax liabilities. Now the company has calculated an amount due to tax authorities but have not yet paid it. So the payment of that amount to tax authorities is listed under tax liabilities. The fourth one in our list is customer advances. Now the company has received an advance from a customer but not yet provided the goods or service that it had promised to deliver. Providing that good or service is a liability on the company's part towards the customer. In the balance sheet, we have assets minus liabilities equal to equity. Now, what this means is if we take out all the liabilities, that means everything that the company owes to third parties, from all the assets, which is everything that the company owns, what is left is for the owners of the company and is called equity, which is also known as the book value of the company. It is also called the net worth of the company. All three of them mean the same thing. Balance sheet आप रास्ता दीजिए, cash flow statement आप अंदर आइए. Cash flow statement has three sections. The first one is cash flow from operations. As the name suggests, any money coming in or going out related to operations of the business. For example, cash received from customers. Now this could be wire transfers, payment through check, a transfer made through a digital platform, or actual cash received. But since it is related to operations, it is part of cash flow from operations. Similarly, we have cash paid to suppliers, again part of operations. Now, this section could also include payments made for rent or electricity, or payments made to the employees of the business. The next section is cash flow from investments. Now, any investments made by the business or money coming in through sale of those investments is part of cash flow from investments. For example, sale of machinery or property, money would be coming in, so this would be added to cash flow from investments. Or purchase of machinery or property, money would be going out, so this will be subtracted from cash flow from investments. Third one over here is cash flow from financing. Financing includes debt. So a company issues debt. Issuance of debt means taking a loan from another company or from a bank. So money would be coming in. Repayment of debt means payment of interest or principal back to that financial institution. So money would be going out. The second one over here is issuance or repurchase of stock. So if a company issues shares, in return it receives money, so money is coming in. And if it repurchases its stock, that means share buybacks, money would be going out, and this is all part of cash flow from financing. Now, if we net all of these three, cash flow from operations, investments and financing, what we get is the net cash position of the company at the end of the year. That means what is the amount coming in, going out, and under which category. Is it operations, investments or financing? Now let's look at a simple business example. Now a guy called Shyam Bahadur, he went to his father. He says, I want to start a business. I want to do trading in mobile phones. So his dad says, yeah, 9 out of 10 businesses fail. Why do you want to start a business? He says, no, my name is Bahadur. I will try my luck and start a business. Or you give me money. His dad says, okay, ja ji le apni zindagi Bahadur. So he goes out into Gafar market, sets up his shop, buys 100 mobile sets for $10,000, 10,000 rupees each. Gafar market rupees, the total amount he pays 10 lakh rupees to his supplier immediately. Now beginner's luck, he sells all 100 units at 15,000 rupees each. So the amount he gets, immediate payment on the spot, is 15 lakh rupees. Nice little profit of 5 lakh rupees. All entries in the financial statements, net profit, cash on balance sheets and cash flow from operations is 5 lakh rupees. Shyam Bahadur is very happy. This is very simple. He shows off his mustache. Now let's move on. Arey mustache bhi leke ja bhai. Let's move on to a not so simple business example. Now again Shyam Bahadur buys 100 mobile sets, but this time he's become a smart businessman. So he doesn't make all the payment at once. He makes 50% payment to the supplier. Now the beginner's luck has faded away. So he's able to sell only 25 units for 15,000 rupees each. But the buyer has also become very smart. He makes a payment for only 10 units. अरे कहाँ से आ रहे हो? टॉम एंड जेरी कार्टून थोड़ी चल रही है. पहले ही श्याम बहादुर कंफ्यूज्ड है. क्या करूँ इनकम स्टेटमेंट, बैलेंस शीट और कैश फ्लो स्टेटमेंट का? I told Shyam Bahadur, don't worry, your CA will handle everything. He said, I just need to learn basics of finance so that I can interact with my CA. I said, fair enough. Just subscribe to this channel and you will get a basic understanding of finance through our videos. If you are subscribing to the channel, that means you like the video. So request you to do the needful and hit the like button. Thank you so much for watching.